Okay, right. The last 2 days, we have been seeing the first day, we've seen what is charitable organization, what is charity, and we also saw the income and the section 215 definition and various incomes, including anonymous donation. We have seen that. Yesterday, we were going through the different exemptions available to us, and we've seen few of those exemptions. One is we learned what is income applied. So what is income applied for religious and or for charitable purposes. We have seen that, and we also seen the accumulation up to 15%. Okay, we also seen that, and we have seen option under section 11(1) for the deemed application, when it can be deemed as application, and accumulation for specified purpose also we have learned it. And today we'll learn corpus donation, corpus donation also we have learned yesterday. Today we learn capital gains, and then the other chapters, other income tax requirements we will learn. Let me quickly recollect with you on deemed application or option under section 11(1). Okay, explanation 2. We learned that this you may have income, but it is not received. Because of that, you could not apply it. Because we have learned that for charitable organization, it is application of income. How much amount you are applying. That is what we said is relevant to us. Application of income. And it may so happen that you are not able to apply. The first reason could be because the income is not received. There can be arrears of fees. There can be accrued interest, which you're not really received there. Because of that, you're not able to apply that, or for any other reason. I've explained any other reason, saying that the income received in the last quarter meant for the subsequent financial year. Okay, so in those areas, you will not be able to apply that. And the register that we all need to, there's something more. And what are all to be mentioned in the register? We also need to give the reasons for availing the deemed application, and we need to give application details also. Year of deemed application, amount of application during the previous year, name and address of the person to whom the payments are made, the object for which such application is made. So we need to give these details. We are trying to capture this in this register. In one register, we are trying to capture all this information. And as I'm repeating, the choice is yours. You can design your own register and then keep that. Year of deemed application. That is the year in which you say that I have not received the income, or the income is for the next financial year. Then you will give the reasons why this deemed application is. Amount of deemed application. What is the amount that you are setting up for? Sorry, not setting up for. You are claiming as deemed application because of non-receipt. In the following year, what is the amount out of the deemed application you have used here? What is the amount of this you have used here? Okay, right? Normally, you should use the entire income, entire amount, whatever amount you are saying. Let's say in this year, your total application is 10 lakhs. Out of that, you said in the previous year that you apply in the next year, let's say 3 lakh rupees. And you file Form 9A also for 3 lakh rupees. You have given the reasons why it is. So this year, your application is only 7 lakhs. This is the amount of application that you are expected to do that. And 3 lakhs, you should have spent, actually, you should have applied during the current financial year. In case there is a shortfall, you don't spend that money, then that much amount, the shortfall will be taxed at a special rate. Okay, right? That will be taxed at a special rate. So please remember to apply whatever amount you are saying it is deemed application in the next financial year. This needs to be done in the next financial year itself. It cannot be carried over for the following third or fourth financial year. Again, I'm saying that I wanted to give name and address. They want the name and address. I'm saying ledger head because if your narration gives these details, name, address, and details of payment, your ledger head can be a support document for this register. So what you can do is that you can have, if you can have, see when you deeming it, an amount as application, this may not be one entry or two entry. This can be a number of entries could be there. There can be many entries there. So in such cases, right, my suggestion is that have in your computer software, whether it is Tally or your own in-house software, give complete details so that the information is available and you can give this as as part of this register, the ledger extract. The object for which the application is made. Everywhere, whenever there is an application, department wants us to mention the objects. The next is setting apart. This we have seen is section 11.2, and we have seen the various conditions for setting apart. Some of those conditions, the conditions are: one, the amount needs to be specific, the period needs to be within 5 years time, and the purpose needs to be specific. Okay, right? The most important is the purpose. The purpose for which you are earmarking, the purpose needs to be specific. And the second, the amount should be available. And third condition is that, sorry, first one I said purpose should be specific, amount should be specific, and the maximum period is 5 years, third one. And not only that, you need to invest this money in fixed deposit. They use the word 11.5 more. But for all practical purposes, I would want you to put it in fixed deposit. I've already explained that to you, why you should do that. Okay. And when you do not do that, it becomes income. When you violate any of this, when the money is not available in 11.5 more, it becomes income. When you're not spending the money, let's say you are earmarking for 5 years, you're not spending it in 5 years, then it becomes income in the 5th year. And you are accumulated it for one particular purpose. Let's say you accumulated for child development in, let's say, Tiruvannamala district. Instead of that, you spend the money for some other district. Instead of Tiruvannamala district, you're spending the money in Vellore district. Then it will be a violation. So much of amount you have violated will become income. Or you have earmarked it saying that you want to buy a medical equipment, let's say CT scan or endoscopy instrument. Instead of buying endoscopy instrument, what you do is that you end up buying an ambulance. You violated that. So the violated part will become an income. That income is subject to special rate of taxes under section 115 BBI. Okay, so when we are setting apart, when we are accumulating, okay, right, we need to give the purpose for which the amount is accumulated. The purpose for which the amount is accumulated. The next is record of the following out of the income of the previous year. Application out of the amount accumulated or set apart. Whatever amount you are spending, amount that you accumulated last year, whatever amount you are spending, whether in the current year, whichever year. So you are giving year of accumulation, amount of accumulation during the previous year out of such accumulation, name and address of the person to whom you made the payment, object for which such payment is made. So this register, we hope will capture the details required by the tax department. First year, when you're setting apart, when you're setting apart or when you're earmarking or accumulating funds, these are the information that will give. The year of setting apart, purpose of setting apart, amount set apart, and period up to which it is set apart, and also the details of investment, section 11.5. It can only be in section 11.5. Subsequent year, when you are utilizing the amount, you will write the utilized amount. Okay, right? When the year, you write the year, and then the amount you utilize, the purpose you utilize, the balance amount. The balance amount will be, I put it here, 8 is equal to 3 minus 6. Right? 3 minus 6. You will do that. And this amount should match with your investment. Balance to be utilized. If there is anything wrong, if the investment is not there, it will be taxed. You use it for some other purpose, it will be taxed. All these things we already discussed that. So this register you are expected to maintain. Then records relating to investment of funds. And repeatedly I've been saying that you need to invest your money only in 11.5 mode. So what are the amount that you have invested in 11.5 mode you have to give to the government? We also need to maintain a register for investment in other than 11.5 mode. Supposing you put money in other places, you need to keep a register for that also, right? So that also should be available. And this is a register. In fact, this register, all of us are comfortable, conversant with because we've been maintaining this. Our investment register, the regular register, name and address of the bank, or public sector company or mutual fund. Okay, right? This can be for any 11.5 investment. Because I've given you some main form of investment, there can be more. And whatever is the instrument, you'll have to write there. Okay. And the FD number or instrument number, whichever instrument, mutual fund number or whatever it is, date of investment, period of investment, date of maturity, amount, rate of interest, and amount received or receivable on closure. All of us are maintaining this register, FD register. So this is just a slight modification to include other 11.5 investment. Okay, right? Any other 11.5 investment that also to be included on this. Application out of accumulated income. I've been telling, right from day one, each year will be looked at as an independent bucket for application. Supposing in year one, right? Year one, you have a bucket and where you receive 10 lakhs rupees. Government says you have to spend 8.5 lakhs. And the 1.5 lakhs, you are allowed to accumulate. Here too, we have another bucket. The same 10 lakhs. You have applied 9 lakhs. You applied more than 85%. So you have accumulated another 1 lakh here. Year 3, 10 lakhs. Your application is, let's say, 8 lakhs. What happens? You should spend 8.5 lakhs, you spend only 80 lakhs, 8 lakhs, so 50,000 rupees will be taxable. You may be using funds from here, the accumulated funds, but the idea is that you need to apply income from each year's main income. You are not allowed to use the funds available from you are allowed to use the accumulated funds and claim the deduction. Okay, right? So in other words, 10 lakhs income, you should have spent 8 lakhs, 8.5 lakhs, you spent only 8 lakhs. So I'm sorry, you applied only 8 lakhs, so 50,000 rupees will be taxable income. Sometimes it may so happen your income, year 4, your income is 10 lakh, whereas you applied 11 lakhs. Your income is 10 lakhs, but you have applied 11 lakhs. How you have applied 11 lakhs? Because you had some accumulated funds main year. From this fund, you used this 1 lakh and then spent. But again, this 1 lakh which you have spent out of accumulated fund, okay, accumulated income, will not be allowed as additional application. In fact, it will not be allowed as application at all to you. Whatever you are applying out of your accumulated funds will not be available as application. In other words, his income will be 10 lakhs and his application will be restricted to 10 lakhs only. Okay, I hope this is clear with you. Now I will go back to the slides and I'll explain. Okay, so when you accumulate, sorry, when you apply any income out of main income accumulated, main or set up or during earlier years, you have to give these details, which year you are accumulated, amount of application during the previous year out of such accumulation, earlier accumulation. Okay, then you have to give the name and address of the person to whom you made a payment, the object. I mean, usually you find these are all common coming again and again. So for that is why I keep repeating saying that since they're asking name and address, better give complete details in your narrations, in your tally or whatever accounting software, so that you can take the ledger printout and use that as a part of your documentation and submit it to the government. Okay, right? The register will have these details: year of accumulation, amount accumulated. These are all earlier. These are all not 11.2 or option under section 11.1, not this one. These are all 15% accumulation. Okay, this is not even your corpus. This is only your 15% accumulation. So whatever, whenever you save some money, now you will have to keep a record of that. Earlier, we were not keeping any record of that. Now government says that you keep a record of that year of accumulation, amount accumulated, and amount applied current year from the earlier accumulation, whatever your amount you apply, name and address of the person to whom payment is made, object or purpose of application. So normally how it will be when you maintain a register, you will have this one. Every year when you accumulate, you will keep writing here. Every year when you accumulate, you will keep accumulating. Year 1, 10. Year 2, 5. Year 3, no accumulation, but you are using. Okay, let's say you're using 5, then you will have to say from which year. Okay, right? From this year, you have to mention that. Okay, keep a record so that the department also will be clear that you're using the accumulated funds. We already, saw corpus donation. I'll just quickly go through the corpus donation and then we'll go to the registers part of it also. The donation can be 2 types. The first one is without any specific direction. This is a normal donation that all of us get without any specific direction. It becomes voluntary contribution. This is for every one of us. This is for religious and charitable organization. When we get without any specific direction, then it becomes voluntary contribution. And you have the privilege of 85 application, so 85% application, accumulation of up to 15%. All these are possible here. When you get the normal or general donation, you get donation with specific direction, and that amount is invested in 11.5, then it becomes corpus donation. This again is exempt. Whatever is the quantum, this is outside the tax ambit. So this is corpus donation. You can enjoy that. You can take this. Idea is that you put that money in fixed deposit, use only the interest from that. In case you don't invest this money, it is not invested, then it is not a corpus donation. And not only that, no application is also allowed. Anything you spend from here also will not be allowed as application to you. And recoupment, I put the small chart here. You withdraw some money. Next time I'll use a lighter color. You withdraw some amount, and then from that you spend whatever amount you apply is not an application to you, but you are spent fulfilling the conditions in Proviso 4I. Okay, right? When you are recouping that, the amount that you're recouping will be allowed as corpus donation. Okay, right? I hope you remember, you recollect what we learned yesterday. And there is a time limit of 5 years. And whatever corpus you received before 1/4/2021, that is up to 31st March 2021, you don't have the privilege or the facility to recoup them. If you withdraw and spend, no application, because government thinks that, the tax officers think that you have already enjoyed the benefit of corpus in those years. Okay, right? And the registers, these are the, various requirements. We already seen that yesterday. And I'm going to, go through the registers part of it. Okay. Basically, the registers are very simple. Okay. What they want is that in case of corpus donation, they want you to give name and address of the donor, their PAN or Aadhaar. In case of religious organizations, this is not necessary. For religious, this is not necessary. Okay. For charitable, yes. If you are a charitable organization, it has to be there. Okay. Amount of corpus donation or to give, date and receipt number. Okay, right. This is a normal procedure. Amount you are investing in 11.5. Okay, then name and address of the bank or whatever place you are investing, you should keep that. In case you are putting the money in other than 11.5, that also needs to be captured in another form. Okay. Then application out of corpus. Corpus amount withdrawn, year of withdrawal, amount applied out of corpus donation out of this. Whatever you are withdrawing, whatever you are applying out of this, we'll do that. And ensure that we are fulfilling the conditions. Fulfilling the conditions of explanation 4I, not provision, explanation 4I. You are fulfilling the conditions. Then you'll also write the purpose of utilization of corpus, name and address of the person to whom you made this payment. Again, if you have a proper ledger with complete information, the ledger extract can be a support document to this. Okay, right? And when you are fulfilling these conditions, the conditions under explanation 4I, then whatever amount you are recouping in the following years, it will be allowed as application to you on the year of equipment. But only restriction is this is only up to 5 years from the end of the financial in which you use the corpus money. Okay. Inter-charity donation out of corpus. And when you make inter-charity, when you contribute another or trust for society, that will not be allowed as application. Okay, right? So, but even then, government wants you to, department wants you to capture and give a registers to them. Date of donation, name and address of the recipient, 12-day registration number, 12AB, amount of inter-charity or donation to another trust, income from the year in which it was given, whether paid as corpus donation. Okay, right? You'll not do that. If it is from current year, you will get the benefit. If it is from the earlier years, you will not get the benefit. Again, if you give it as a corpus, then you will not get the benefit. Okay. Application of or loans and borrowing. This also we have seen yesterday, right? Any application of loans or borrowings is not allowed as an application. However, when you repay the loan, it is allowed as application to you. Here again, there is a ceiling of 5 years. Okay, right? You can, and again, you have to make sure that you're fulfilling all the conditions, whatever you've seen in corpus donation, fulfilling all the conditions. And then when you repay, it's allowed as application, but only problem is you get a period of maximum 5 years, beyond which you don't get it. And also, whatever loan you're taken before 1/4/2021, any repayment now will not be allowed as application to you. And the registers, we have seen that yesterday. These are all the registers that you are expected to maintain. Okay, right? Date of loan, and receipt number, amount of loan, the lender's details, ledger head, mode of receipt, PAN or other, purpose of loan, and ledger head. Why the mode of receipt? We'll see that little later. Okay. Loan application register, very similar to the corpus main application register. Okay. Refund of loan, same details, date of loan taken, amount of loan, purpose of loan, from whom you have taken, repayment details, date of repayment, amount of repayment, balance amount, whether claimed as application, complaints of conditions stipulated in this section 4I. Okay. Any doubts, any queries up to this? If there are anything, please feel free to ask me. Okay. Any doubts, any clarification? If there is anything, feel free to put it in the chat box so that I'll reply to your questions. Okay, we go to the next one, capital gains. We all know, I'm sorry, I mean, some of us will know what is capital gain. Capital gain is very simple. Capital gain is nothing but, so let's say you purchased a piece of land, okay, right? And constructed a building or just a land alone. Let's say you bought it for 10 lakhs 10 years back. Today, its sale value is 3 crores. The difference between this is the capital gains. Whatever the sale value minus your cost is the capital gains. And what is a normal provision for main individuals and others? In case it is land and building, okay, right? In case it is land and building, you are allowed to invest in another land and building. Of course, there is a small, there is a small calculation here. I'm just giving you the principles only. You're allowed to invest in other land and building, okay, right? Even if it is only land, you can buy another land and building. Okay, right? You can buy another land and building. Now government has brought in a ceiling. Government said you cannot my memory is right, you cannot go beyond 10 crores or 5 crores. I'm not very sure. I'm sorry, I'll clarify that to you tomorrow for individuals. And otherwise, you can put under 50 EC bond or otherwise capital gains infrastructure bonds of maximum of 50 lakhs rupees. Okay, right? Maximum of 50 lakh rupees. This is for a year, irrespective of the number of properties. Even if you sell more properties, you get only 50 lakhs. That's the infrastructure development bond where you can invest 50 lakhs. This is the normal one for everybody else, but for charitable organization, that have 12 AB exemption, the treatment is different, okay, right? And section 224 says that income includes even capital gains also. So in case you need this money for running expenses, you can use the capital gains for your application, program expenses. Okay, right? You can use it for application. It is possible. And you can buy any other asset as long as it is towards the objective of the organization. As long as it is towards meeting the objects of the organization, you can buy any other assets. Or you can put the money in fixed deposit. Fixed deposit is also treated as capital asset, and the amount of deposit that you make is allowed as application to you. It is not capital gains. I'll take the simple illustration here. It is an organization that sold the land and building for 50 lakhs. Let's presume the capital gains itself is 50 lakhs, okay, right? And they bought a vehicle for 5 lakhs, and they purchased a computer for 2 lakhs, and they put the balance amount in FD, then there is no capital gains tax for them. Capital gains tax is still for them. There's no capital gains, and so there is no taxes for them. So this is a very, very important and useful one, which government is giving to us. What they're saying is that you put the money in fixed deposit. I will give this as application to you. Whatever amount you are putting in fixed deposit, that will be allowed as application to you. So you need to remember this. But please also note that there is of course, Chennai, now land acquisitions, I don't know whether it is happening for Metro. It was happening some time back. And when there is a compulsory acquisition of land, the amount of compensation that we get from government is exempt from income tax. But not so for charitable organization. Because we are on a different footing. And even if you get on this type of exempted income, compensation for compulsory acquisition of property, put that money in fixed deposit, then you're outside the tax problem. Okay, right? Any queries, anything, any doubts?
So, John sir, Rajesh.
So the business, we have already discussed that on the first day, the business part of it. what we have seen is that the business that we are doing has to be incidental to the objects of the trust, or in carrying out of the objects of the trust. It cannot be beyond that. You have business which is not towards achieving the objects of the trust. Objects is what is given in your memorandum, what is given in your trust deed. You cannot presume that this is my objective. Running business is certainly not an objective, so you cannot do that. It should be, directly in implementing your objects. If you have any business activity, then yes, you can go ahead, and we are covered under section 11(4)(a). And what you should do is that you should keep separate books of accounts. Not only that, you also need to get tax audit report when the threshold exceeds the minimum amount. I think it is 1 crore or 2 crore. I'm sorry, I'm not very sure of that. Maybe I'll clarify that before we conclude this series. Okay, right? And there is also another business by a trust is also possible. Here is a case where somebody is given business itself as property of the trust. Okay, right? Let's say a businessman writes a will saying that this business will be property of my trust, and the income from the business will go to support poor children in their education. It is possible they can do that. And again, when they do that, the conditions are the similar one. There has to be separate books of account and tax audit report when the threshold of income, when the income exceeds the threshold, you have to get the tax audit report. That's one more tax audit report you have to get from the CAs. Okay, right. Any doubts, any clarification? Let me move on to the next one. Contribution or transfer to another charity or inter-charity donation. Please note that FCRA prohibits you transferring funds to another charitable organization or religious organization. Income tax, there is no such restrictions. Okay, but there are other restrictions on inter-charity donations. Let's see what is that. There are various decisions in the court, including Supreme Court. They have said that contribution to another charitable organization is also application of income. And what they say is that it has to be treated at par with direct application of income. Okay, it has to be treated at par with direct application of income. And Supreme Court, in case of Gandhi Trust, said valid application of income. Contribution to another trust is valid application of income. So contribution to other trust is application. In fact, the very first day we said that transfer to other trust is also application. Okay, this is because of all these decisions. We'll talk about this Champa charitable trust little later. Okay, right? And in tax department has been having this view that charitable organizations are misusing or abusing the privilege given to them in form of contribution to another charitable organization. And in fact, I was in Bangalore conducting a training program on FCRA. And in that meeting, there was a commissioner of income tax. He was earlier in Chennai as deputy commissioner. And he was taking a session on income tax for the charitable organization, where he said that charitable organization misuse this inter-charity donation or contribution of the charity. How they are misusing? He was giving an illustration. I'm just given. Please note that this is very hypothetical. This will not happen because I'm not giving any application at all here. Okay, I'm not giving any application here at all. In other words, there is no payments at all here. Does not happen. Just to bring out to you the reason why department brought these changes. Okay, right? Take the example. There is trust A. All these trusts are in the same group. Okay, there is. We have this. Sorry. All these trusts are in the same group. So it is possible. That we have such combination. Even in the business, like there are a number of engineering colleges run by one trust. So if there is surplus in one engineering college, it can always be transferred to the trust. Okay. We are now taking this illustration. This is only hypothetical, will not happen in the real time. Okay. Take the example, there is one trust A, its income is 10 lakh, there is no application, So, but otherwise, what is required to be applied? 85% is 8.5 lakhs. And what they do is that they transfer the entire 8.5 lakhs to their sister organization, Trust B. Okay. And they have satisfied the condition of 85% application. So they enjoy tax benefit. So what they have done? They have not spent 1.5 lakh at all, but they enjoyed benefit. In fact, there was no program expenses. Trust me, what they are doing, very similar. They don't have any applications. What they are doing, they transfer 85% of their income to another sister organization, Trust C, and they don't pay any taxes. And they have in the process gained about 1.27 lakhs. Trust C is also similar one. What they are doing, they have not having any program expenses. They transfer 85% of the income to Trust B, and they enjoy tax benefit. In that process, they did not spend 1,80,000 because this is allowed 85%, 15% allowed as accumulation. And Trust D, what they are doing, they are applying, they have some program expenses. They have spent only 5,22,006. What normally should have done if it is made, there are no such combinations are here. Trust A should have applied 8.5 lakhs. Okay, right? Because of the main 15%. Because of this various permutation combination, this group, they spent only 5.22 lakhs. Okay, they spent only 5.22 lakhs and enjoyed the 100% tax benefit on the entire 10 lakh rupees. And they claimed as application, total amount claimed as application without paying a pie is so much, okay, right? All these things are possible, okay, right? So that is why the government brought in an amendment now. What they now say is that when you contribute, when you make donation to another trust, when there is inter-charity donation, only 85% of the eligible donation will be allowed as application. In other words, let's say you contribute 100 rupees to 1,000 rupees to Trust B. Okay, this is out of current year's income. Your application will be restricted only to 85 rupees. You have to forego 15 rupees. Okay, so please remember when you're contributing to your sister organization or even to a third organization, not necessarily interrelated one, even to a third organization, when you are making contribution, your contribution will be restricted to 85%. You will have to bear 15% by the organization. So when you will escape from tax, only overall your income, that 15% can take care of this one. Let's say your income is, here I'm taking 100,000 rupees, 1 lakh. Okay. Let's say your income is 20 lakhs. You need to apply 17 lakhs. Okay, right? And you have a cushion of 3 lakh rupees. Here, 1 lakh you will not apply, but you will get only 85,000, 15,000 rupees will not be allowed. So this is within the 3 lakhs, so you escape from tax problem. On the other hand, when you make a larger donation, and in case instead of 20 lakhs, you applied, what you applied is the entire 20 lakhs you applied, or 19 lakhs you applied, then you could run into problem. Supposing you apply 19 lakhs, you will have only 1 lakh with you. Whereas here, you need this 15,000. In case it is more, then you run into a problem. Okay. I hope what I've explained to you is clear to you. Now we'll see the other important conditions to check when you are making contribution to other organizations. As I've been telling, transfer out of accumulated funds will not be allowed as application. Okay, right? In fact, I gave the illustration also earlier. for the purpose of the register that we are asked to maintain, any transfer out of accumulated income will not be allowed as application to you. This is including inter-charity donation. Okay, right? Also ensure that your recipient organization also has 12 EAB. Tomorrow we're going to talk about the registrations a little more. Recipient organization also has 12 EAB. And also it should be similar in objective. For example, you are an organization which is educational, okay, right? And you contribute to your parent organization which is religious. Both may have 12 EAB, but objects are not similar. You will run into problem. Okay, so ensure that your recipient organization has 12 EAB and also similar objective. Okay, and this is what I've explained. Do not transfer from charitable to religious organization. This is an interesting decision, Bombay High Court decision, and this is going to affect us badly. Here in this organization, what happened is there is a trust, okay, right? It received 1 lakh from Trust LU. Okay, it received 1 lakh from Trust LU, and then in turn it contributed to LU. Okay, it contributed to LU 50,000 rupees and 55,000 rupees one. So they've given back the 1 lakh. So tax department invoked a specified person's main clauses, and they have said that this is a benefit. We'll talk more about it, I think, tomorrow. This is a benefit given to the trustee, to the trust. And they have also, the court also said, even trust is also a person, this is a benefit given to the trust, and therefore no exemptions to them. And we will discuss this a little more. But why I am putting it now is that when you are making donation to another organization, please do not get back the donation from them. Okay, getting back the donation from them. If the donation amount is 50,000 or more, 50,000 as I mean, I'll tell you a little later. 50,000 rupees is not one time or not in a year. It is over a period. Okay, so the specific person. And in such a case, then you will run into a problem. Okay. And the register that are required to be maintained is that in case of inter-charity donation, you need to have amount paid or credited to the organizations. Okay, right? Please ensure that it is 12 EAD, and you need to give their name, address, and PAN number. Okay, the object for which the amount is given also you need to give. The donation register is not a very complicated one. I mean, it should have the name and address of the recipient organization, their PAN number. Even though they're not asking 12 EAD, I wanted to put 12 EAD number so that you know that it is that organization also enjoys tax benefit. Object of the recipient organization, the purpose of transfer, your voucher number and amount. Okay, right? You may add, maybe you can add the mode of transfer also. Because cash payments will be disallowed. If you're making payment about 10,000 in cash, that will be disallowed to you. Okay. Thank you. I'm sorry. There are other requirements when it comes to income tax. Okay, we'll see those requirements, and then with that, I think we'll wind up today. Earlier, till 31st March 23, we had this very beneficial clause in the income tax law. What it says is that in case you have exemption under 12WA, your exemption is deemed to be available for the earlier years also, even if your trust is not registered. Okay, right? Provided the objects and the activities of the trust remain the same. You will not change the objects and you will not change the activities. If they remain the same, when you get exemption in the later year, it is deemed to be available for the earlier years also. So, tax department was prohibited from reopening, because when you apply for registration, when you don't get registration, they will send notices, and there is every possibility that your early areas will also be reopened for finding out the taxability. But once when you get registration, of course, this is now redundant. You'll not get this benefit now. But once I'm talking about the earlier provision, but once when you get registration, your sins of the past was also forgiven. Okay, but now this benefit is not available to you. This beneficial clause is not available to us. Let's hope and pray that the government will bring it back. We already discussed on anonymous donation, and I'm going to skip that anonymous donation. We all know these business deductions, okay, business requirement, 40A IA and 40A 3 and 40A 3A. What is 40A IA? Payment of payments without deduction of TDS tax at source, okay, right? I'm sorry, 40A 3. I'm sorry, I'm talking about 40A 3. Let me first complete 40A IA and then complete 40A 3. 40A IA is that when you make payment where tax is to be deducted at source and you're not deducted, 30% of the amount on which you're not deducted taxes will become your income, will be disallowed to you. Okay, right? On the payment on which you're not deducted taxes, 30% will be disallowed to you. And today with this, all these restrictions, and if you add this, then you'll run into a problem unless you have this 15% cushion. But many of us will find it difficult now. Okay, right? And what are the payments on which taxes to be deducted? We will see this. I'm not in this 5 days. I will have a special session for all of you. I was originally planning to do it on Saturday, but Saturday, I need to have my staff training. Or maybe in the following week, we'll have this session. I'll tell you when I will have that. You can all join. And for those who are not able to join, I'll give the recording also to you. What is 48.3 and 48.3a? This is nothing but cash payments in a day in excess of 10,000 rupees. Okay, cash payments in a day in excess of 10,000 rupees. We all know that, in fact, all our clients are very well aware, because the year in which government introduced this clause, because normally when they introduce this clause in the budget or finance act, it will be applicable from next year onwards. We started putting in our management letter saying that please, ensure that we are not making payment in excess of 10,000 rupees in cash, withhold taxes, direct taxes at source, TDS to be complied with, and we also give some illustration looking at the nature of payment, what are the clauses applicable to you, and what you should do, what may happen. Earlier we used to say what may be the consequences, but now we don't talk about consequences. It's very simple. When you make payment, ensure that you are making payment only by account pay, cross check, or by online transfer, NEFT, whatever it is, or by draft, not definitely in cash. Have a policy for your organization. Above 2,000 rupees, we will not make payment in cash, whatever be the one. And this cash payment or the check payment that we are looking at is not to the one level. For example, you conduct program, you give your program coordinator 1 lakh in check, account pay, cross check, and he goes and spends everything in cash. It will be disallowed. Or you are constructing a church in a village, okay, or a school in a village. It's a remote village, okay, right? And what you are doing is that you transfer to your program coordinator, whoever it is. Let's say, periodically you are transferring amount to them. Totally you transfer 10 lakh rupees. And this gentleman spends entire amount in cash, you will be in trouble. Most of the people come and give the excuse saying that they are not having the bank account. When there's no bank account, how do you make payment to them by check? I tell you, government, what they call as financial inclusions, they encourage bank accounts for all people, and also the gas subsidies, what they get will come only if they have a bank account. So most of the people will have bank account. So you have to tell them. Otherwise, you have to ensure that you don't pay more than 10,000 rupees in a day. And see, for the laborers, it's not a problem because laborers is not really a major one. And you can, you can ensure that it is less than 10 lakhs. The problem will come only when you buy material. And I'm sure all these shops will have bank accounts. So please do not have any excuse that we are working in a village, we'll not be able to do this and that. All those excuses will not be available to you. We all know this, so I'm not going to explain more. And this 48.3A, what it says is that this is not only the cash payment, for the what you're incurring, but also relates to the outstanding liabilities. For example, you purchase something on credit and you are making payment now. Let's say 2 months back, you purchased, provisions for your home on credit. And what you're doing is that now you are making payment to him. Even this also could be paid only by account pay cross check, or the limit should not exceed 10,000 rupees. Don't presume that, I bought material 3 months back, I'm giving, the person is putting pressure on me, he's sitting on my neck and he wants the money immediately. So I given 50,000 rupees. No, it will be disallowed to you. The next one now, these are the other requirements. Please ensure that your activities are as per the objects of the trust. I'm going to explain this again, tomorrow and day after. Now, this is very, very important. Whatever good thing that you may be doing, but if it is not as per the objects of the organization, you will run into a problem. We have an NGO. They are doing wonderful work among the orphan children. And they were earlier in Chennai, and then they moved to Padappai. When they moved to Padappai, nearby villages, they noticed that a lot of young widows. And they, started working among them, and they spent some money. At the time of hearing, the income tax officer asked me, John, what is this widow support? I said, these are young widows, sir, and these people are supporting them because, they are trying to help these people to come up. And he said, very good, John, wonderful, but where is in your objects? When I saw that it is not there, then he said, then I have to tax them. And thankfully, I gave an explanation to him saying that, no, sir, this is not for them. The head is wrong. It is primarily meant for the children or the kids at home, because this is a children child care agency. So they are supporting the kids with the young widows. So we'll change that. He said, okay, ask them to be careful in the future. Okay, so please ensure that whatever you're doing, it should be as per the objects of your trust or a memorandum of your organization. You cannot go beyond that. And the bills should be proper, do not have estimates. Even now we see estimates and quotations. What is the possible reason for estimates and quotations? Because you want to say GST. I tell you, you will have more trouble than saving this 18% or 5% or 12% GST. Okay, right? So best is pay GST, get the proper bill, and then attach that. You're not going for estimates, quotation, you're not going to be helped anyway. In case your case is taken up for scrutiny, and if the officer is not happy, then he may say that you're not keeping proper books of account, and then he will reject the books of account, in which case there will not be any exemption available to you. Okay, we'll see this later and more elaborately. And don't keep photocopies or Xerox copies. Okay, some of you do keep only photocopies, saying that my donor wants the originals. You try and talk to them and try and convince them in case they are taking original, because these are all your payments. These are all your organization's expenses, and you are expected to keep. You should only keep. They are only giving funds. They need best utilization certificate signed by a CA for their requirement. They did not get the original bills from you. But sometimes they do insist, in which case you try to tell them and convince them. These are all my payments in my organization. I need to keep the bills and vouchers here. I cannot keep photocopies or Xerox copies. And in case they still insist on saying that they are keeping all these things on your behalf, and at any time when the tax authorities or anybody wants it, they will give that to you. Okay. But there may be an occasion, there may be instances when you may have to keep only photocopies of the bills. For example, these days a lot of bills we are getting is as a thermal printout. What I mean by that, the bill that you get, nice shiny sheet, and after 1 week, the image will start fading. After 2 months, if you see there's only nice sheet of paper will be there, nothing will be there. So my suggestion is that when you get bills like this, immediately take a photocopy of that. keep both original and the photocopy. Okay, right? Do not keep only photocopy, or do not keep these thermal printed bills because the images will go. Keep that both so that it will be a record for you. And do not have overwritten or alteration on the bill. And whenever there is any large purchases, go for quotations and competitive bidding. And proper maintenance of books of account, we just discussed that. Corpus donation, we already discussed that. And do not give donation to another organization as corpus. We have already seen that yesterday. And don't make any alteration in the memorandum and trust deed. Okay, right? Because the moment when you make any alteration, your exemption is lost. Your 12 EAB now is lost. And you have to make fresh application within 30 days time. Within 30 days time, you have to make fresh application. You will be treated as a fresh organization applying for registration. You have to go through all the process. So please do not touch your objects of the organizations. You already seen this 40A3 cash payments, okay, right? And for 40A also we already seen this. Let's go into this cash deposits, cash loans, and cash refund of loans, and also acceptance in cash 2 lakhs or more. I'll go to the next slide, and I'm sharing this. The same thing I put it in the paraphrase in the next slide. I'll go to the next slide. You should not take. In fact, you can take, but you have to pay penalty. When you take loan of rupees 20,000 or more, it is not more than 20,000. It is 20,000 or more in aggregate, right? In cash, that attracts penalty. Many of us I come across in your books, you have the habit. What the problem, why? Because you don't write the books of account every day. And even at the end, you don't do it. Only when we start calling you and pushing you audit tax filing, then you start entering everything into your computer or start writing the manual books. When you finish that, every month you will find that, or some months you find that there are more expenses than the income. So what you do, subsequent month it will get automatically added. What you do immediately, you put temporary loans. You put some name, temporary loan from treasurer, temporary loan from president, and you put all these things. And mind you, if the temporary loan or whatever you are putting is 20,000 or more in a year, or it could be even accumulated one, we are going to see this also, then that much amount is liable for penalty. We'll see what is the penalty. Okay, right? The next one. At the time of taking loan, supposing you're taking only 2,000 rupees loan from X, Y, or Z. Okay, right? You're putting temporary loan 2,000 rupees. Let's say for X from X. At the time of taking this loan from Mr. X, in your books, it shows already it shows that you have 22,000 rupees outstanding. This may be last year's month. Okay. This year, you're taking only 2,000 rupees. Moment when you take this will attract penalty. Okay. Or both put together. Whatever amount you are taking now, plus put together, if it exceeds, if it is 20,000 or more, it will attract penal provisions. Okay, right? I'm sorry, I'm not explaining this correctly. This one, there's only 20,000 rupees if your book remaining unpaid at any point of time. Okay, right. The next one is repayment of loan. This is acceptance of loan in cash, repayments. Similarly, when you repay a loan, many of us know because we put this temporary loan on the repayment. When you repay the loan, also the same conditions applicable. Repayment, they say that when you make repayment with interest is 20,000 or more. Because most of us do not repay with loan with interest. When you make repayment with interest, if it is 20,000 or more in cash, the penal clauses will applicable. And the loans or deposits are held in joint name. Okay, not one name, joint name. Then in the joint name also, it should not be 20,000 or more. And both put together, 20,000 or more, then the penal provisions will be applicable to you. So please remember when you are writing your accounts, do it every day. In case where you have to take loan, where you have to take money, borrow money, to make payments, please do it only by way of account pay cross check or by bank transfer. These days, online transfers is instantaneous. Okay, right? You have facilities. You can get the money and then you can withdraw and spend the money. Do not go for cash, and that will attract disallowances. And also, please note that we will be reporting as chartered accountants in audit report. We are going to report that in audit report. I will discuss that, on the last day, what are all we are going to report. Of course, I'm not going to discuss in detail. The important ones I'm going to discuss with you. Okay. Next one, receipts of rupees 2 lakhs or more in cash. Okay, right. Only during COVID time, there was little relaxation for certain category of people, not for everybody. You cannot, the section very categorically says, no person shall receive an amount of rupees 2 lakhs or more. No person, nobody can receive rupees 2 lakhs or more. When every now and then people come and ask me, sir, I'm selling this piece of land. The buyer says he will give only so much in cash. I keep telling them you're at a risk, right? This 269D is there. Supposing government catches you, you will not only pay taxes on the amount which you are not declared it, the entire amount will go to the government as penalty. What are these 2 lakhs? When are those? There are three occasions. One is aggregate from a person in a day, one day, or in respect of single transactions, or in respect of a transaction, one event or occasion from a person. Okay, right? We'll see this, what it is. Aggregate from a person in a day. From one person, you receive the money in one day. If it is 2 lakhs or more, then that attracts penalty. 269. We'll see that. Okay, right? Let's say I've given an illustration here. Mr. A received from 5 different persons, E, F, G, H, I, all less than 2 lakhs rupees, but together it exceeds 2 lakhs. Okay, each one has given them 1 lakh rupees. So he received totally 5 lakh rupees in cash. This 269 disallowance will not apply to him. Instead, he received from E 2 lakhs and from others 1 lakh. So totally received 6 lakhs. This 2 lakhs will be subject to section 269, and then you'll have to pay the penalty, penal amount. Okay. Then transaction with reference to, one transaction, respect of one transaction. Okay. One transaction. I'm giving an example here. Supposing Mr. A sells his goods, his invoice is 10 lakh rupees. And Mr. B makes payment. What he does is that he gives 2 lakhs by RTGS. RTGS is online transfer. He makes 1,50,000 rupees in cash. He gives 1,90,000 rupees in bearer check, open check. And he makes 4,60,000 rupees by account pay cross check. So what happened? Mr. A received this 10 lakh rupees. Unfortunately, out of this 10 lakh rupees, 3,40,000 rupees he received in cash. Bearer check is equal to cash only. Okay, right? So otherwise, other than by account pay cross check. So because he received his 3.4 lakhs in cash, 269T will be applicable and he will have to pay the penalty. Again, Mr. A sold his car for rupees 2,50,000 rupees. When I say A, this could be an organization also. And you have taken 50,000 rupees by check and another 2 lakh in cash. 2 lakhs in cash on different days. Let's say on 5 different days, you're taking 2 lakh rupees. Each day you've taken only 40,000 rupees and put on the bank. Because you've taken 2 lakhs for sale of car on one transaction, 269T will be applicable to you. And you will be asked to pay the penalty. Please remember all this information we will get from you and will report in our tax audit report. Okay, right? When we audit, my staff, my team will be looking for this. And the last one. This is in respect of when he gets 2 lakhs in respect of one event or occasion from a person. Okay, right? One event or occasion from a person. Let's say, Mr. A is getting married. Okay. A is getting married, and he gives, on the occasion of marriage, he gives various cash gifts, okay, right, from friends and relatives. As long as the individual gift is less than 2 lakhs, he is not a problem. Okay, right? But supposing for his marriage, his friend gives him a main gift. One day he gives 1 lakh, another day he gives 50,000 rupees. Okay, and another day he gives 40,000 rupees. On the wedding day, he gives only 10,000 rupees. But unfortunately, because the total amount he gave is 2 lakhs, it is Mr. A will be liable to pay a penalty. Okay, from B, it may not be a business expenses. So he may not have much trouble, but A will have a bigger problem. But we may have other problem. Okay, let's not get into that. Okay. So how is it relevant to us? All these things. Of course, we know when we don't take loans in cash because we have the tendency to put temporary loans or loans from treasurer or secretary president. But where is the 269T will be applicable to me? 269(2) will be applicable. Say, supposing you're at a school, okay, right, or in a hospital, don't receive or don't accept from a parent 2 lakhs or more in cash. Supposing you run a school and you also have a hostel facility, but all put together, if the fee is 2 lakhs or more, do not accept in cash. Or in a church, there will be occasions, people coming and telling you, brother, I sold a piece of land, I have got some money. This is my tithe, I want to give it to you. Please receive this. They will give more than 2 lakh rupees in cash. And if you put a receipt for that, if you prepare a receipt for that and give it to the gentleman, then your organization will have to pay the penalty under section 269T. Okay, right? So please do not accept contributions or offerings of 2 lakhs or more in cash. Okay, right? Of course, there are exceptions. I will share that because government is exempted, banking company is exempted. Okay, right? And also the loans. Whatever loans it is exempted because they are otherwise penalized under loans clauses also. Person receiving loan in cash is otherwise because the threshold limit is only 20,000 rupees. They are penalized there. Okay. And these are the penal clauses here. 269 SS is accepting loan in cash. This amount is 20,000 rupees. The penalty is equal amount. Supposing they are taking in your books, you put that you have taken loan of 20,000 rupees or more in cash, or 50,000 rupees. Let's say you have taken put 50,000 rupees in cash. 50,000 rupees is a penalty for you. Okay, right? Similarly, you are repaying loan. I'll take this one. You are repaying loan. Okay, right? And what you have done is that books you have put 50,000 rupees in cash as temporary loan taken from president, and you are putting 50,000 rupees temporary loan refunded back to the president. The problem here will be equal amount will be levied as penalty to you. 269 ST. You receive 2 lakhs or more on an occasion. There are 3 instances, okay, right? And when you get that, when you get 2 lakhs or more, whatever amount you are receiving, equal amount will be levied as penalty to you. Okay. The last line of the day. You do not have the privilege of setting off or carrying forward the losses. I've already explained that to you, right? Each year is looked at as an independent basket, and your income for each year will be taxed. You cannot, take previous year's surplus and use it, or supposing you used more money. For example, if you apply only 1 lakh, you apply 1 lakh 10,000 rupees. The 10,000 rupees you cannot get set off in current year. These are all not possible. Each year's income needs to be applied in each year. Okay. With this, I complete my presentation for the day today. If there are any questions, please feel free to put it in the chat box. Then I'll be happy to answer that questions. Please feel free. Okay, okay. If you save accumulated amount 15% every year and invest in 11.5, okay. Shall we spend it for any project later according to the purpose? Yes, you are allowed to spend that. It's your choice, Mr. Pankiraj. You can do that. There is no restrictions. What purpose you can spend or what purpose you should not spend. There are no such restrictions on that. You can spend that. But only only issue is that what you are spending or what you are applying on accumulated funds will not be allowed as application in that year because each year's income is an independent basket. You get so much money, you spend 85% out of that. Okay, that's all. To meet that 85%, you may use accumulated funds. Or when you use accumulated funds, you'll be meeting more than 85%. If you use accumulated funds, it will not allow us application to you. That's all. We have token loans from financier to arrears of salary. Is the repayment of loan allowed as application of money? If it is before 2021, 1/4/2021, repayment will not be allowed as application to you. If the loan is taken after if the loan is taken from 1/4/2021, it will be allowed as application to you, provided when you took the loan, application of the loan was not considered as an application. If these, in case of thanks, Mr. Rogers, I will not clarify that. When you're having capital gains, when you put FDs, fixed deposit, the capital gains when you put it in fixed deposit, my humble suggestion is just put for 1 year at least. Okay, at the end of the 1 year, you can withdraw and then use the money. Then there will be no capital gains tax. Okay, right? If the choice is yours to put for more than 1 year, but at least put the money for 1 year at least. Multiples of less than 2 lakh given by a donor at different dates is acceptable or not? Yes, you can go ahead. I mean, you can do that. But the problem is Asha Jeevan Trust is a charitable trust and we'll be filing Form 10BD for ATG. Even if you do not have ATG, at the time of audit, we file audit report in Form 10B and 10B asks information about all the men, ask us to reconcile and we need to give these information, then there will be difficulty for you. Okay. Fortunately for Asha Jeevan Trust, because your gross income is less than 5 crores and you're not having FCRA, you may not run into problem. Okay, right? But I'm not very sure about it. But avoid as much as possible getting in cash, I mean, even the donations also. Okay, right? The ATG says beyond 2,000 rupees, if you receive in cash, you're not eligible for ATG. Okay, right. Anything else? Any queries? Anything? Okay, thank you so much. Thank you so much for patiently listening to me. Hope you're enjoying the session. And I really appreciate all of you for staying back and listening to me. And we'll see tomorrow. Thank you. God bless you all. Bye.